Why did Argentina face a major financial debt crisis? Have you ever wondered how a country can go from being a promising economy to facing a massive financial crisis? Argentina's story is a compelling example of this transformation. The Argentine debt crisis is a complex tale that unfolded mainly during the 1990s and early 2000s. Let's break down the key reasons behind this significant financial turmoil. First, Argentina faced a high and growing debt burden. Throughout the 1990s, the government borrowed extensively to cover fiscal deficits. When government spending exceeds revenue, borrowing becomes a common solution. However, Argentina was legally restricted from printing money to address these deficits, leading to an unsustainable debt load. As the debt grew, so did the costs of servicing it, which became increasingly difficult to manage. Next, Argentina implemented several economic reforms during this period. These included trade liberalization, deregulation, and privatization of state-owned enterprises. To stabilize inflation, the Argentine peso was pegged to the United States dollar. Initially, this approach seemed effective, but it limited the government's ability to adjust monetary policy. When the fixed exchange rate became untenable, it eroded investor confidence and led to capital flight. External shocks also played a significant role in the crisis. Changes in global financial conditions and fluctuations in commodity prices impacted Argentina's economy. The fixed exchange rate made Argentine exports less competitive, worsening the trade balance and reducing foreign currency inflows. This situation made it increasingly challenging for the country to meet its debt obligations. Fiscal policy challenges further complicated matters. Despite attempts to control spending, Argentina struggled with ongoing fiscal deficits. While some may argue that excessive spending was to blame, external shocks and structural issues were more influential in creating the crisis. The privatization of Social Security and increased demand for foreign currency also contributed to the mounting debt. The fragility of Argentina's banking and financial system exacerbated the crisis. Fears of government default led to massive withdrawals of bank deposits. In late 2001, the government froze deposits, which halted much private sector activity and deepened the economic downturn. The culmination of these factors led to a sovereign default in late 2001, when Argentina defaulted on approximately $95 billion of sovereign debt. This was the largest default in history at that time and resulted in Argentina being shut out of international capital markets for years. Political and policy instability added to the uncertainty. Frequent changes in government and policy approaches created an unpredictable environment. After the crisis, Argentina underwent debt restructuring in 2005 and again in subsequent years, but legal disputes over holdout creditors delayed full market reentry. In summary, Argentina's financial debt crisis stemmed from a mix of excessive borrowing, rigid economic policies, external shocks, and a fragile financial system. These combined factors created a scenario where Argentina could no longer meet its debt obligations, leading to a significant economic collapse. Understanding this crisis highlights the importance of sound fiscal management and flexible monetary policies in avoiding similar situations in the future.